Now you listen to me. I want trading reopened right now. Get those brokers back in here. Turn those machines back on. Turn those machines back on.
Hey, what's up, everybody? Yeah. All right, great JD starting off the high probability watch list. Got a trade happening right now, too. All right, actually, there's a trade going on here. Stop the presses. Stop the presses here. Thank you very much, JD. I was going to play the whole thing, but that's for some people maybe never heard our theme song. What a great song that is. Performed and written by one of our members, JD, Jay Doucette. Hopefully that's the proper way to say his last name, but you know who he is. All right, so yeah, just kicking it off. It's a Friday. Paul's on the mic. I'm doing the research, and the Rockbot is doing its thing right now. First trade of the day, I think this was. I've been waiting all day, and I was wondering if this was like just not triggering or anything. Well, we just had a trigger here on the Rockbot law on perfect divergence. And you can see it's already hit its first target, and its second target's above us, and a trailing stop behind that. So just to kind of fast update on that for you. Now, I was trying to promise people to get the new bot in the uploaded, the new one with the stop already set in. So I want to try to do that after the watch list video education I'm going to bring you today. It's my first week back from my vacation I took last week, and before that I had my operation. So I've been, real sporadic in research and stuff and everything. And this is my first week back. And I tell you, I discussed this live on the radio right when I got back, the anxiety I had coming back and feeling like I was going to get trapped in the market. And I came back with a, more with a goal or a game plan to do more shorter term trading, be in and out. But a couple things that came to light this week that I want to want to actually focus on a little bit more is we traded a lot of relative strength, and that is a technique that is a standard technique that traders know, but not everyone knows how to apply it in a trade. And and I think we did a good show on it the other day, but I didn't record it. So I want to go back, and I'm going to kind of go over that information on and get it recorded here, because going forward in this environment, this is a perfect environment for relative strength trading, because you have the momentum traders behind you, and they're searching for the same thing. So it's almost a self-fulfilling prophecy that the strong stocks go higher, the weak stocks don't do anything or go lower. It's almost a perfect scenario for that. So we have to focus on that. You have to focus on that while that's a good trade opportunity. Because down the road there might be another. There might be selling the rips. It might be a downward channel. We might have a rug pull. There's so many things out here up at this level that could hit the market. It is so important to kind of protect ourselves here and protect our capital. I'm almost to a point where I want to just step away because I'm that nervous about the market, and that's something that I don't usually get, and it forces you sometimes to think out loud or think too much in the market. Because the first thing I was going to do about this is show us a good way of hedging this market, and I was doing some research on long tail hedging, black swan hedging, basically, things. And we actually had Kelder on yesterday, and Kelder has some great information on doing some strangles to protect your and getting paid for waiting for the market to pull back. Or buy another type of insurance, or you could go straight up. You could go straight up buying, outright puts, or calls in the VIX, or any other combination you want that kind of correlates with the market moving up and the market moving down. But the hard part on that is timing. Timing is the most impossible thing to get in the market. Even when you feel like it's extended, the market knows that and will go further. So the more and more people that get on the side of the trade expecting something to happen, the more and more likely it's not going to happen and it's going to blow them out. So that's an area we have to deal with right now, and that's my issue I'm having, my conflict I'm having. I don't want to say that we don't all have our internal conflicts with this market. We've been having a great year, but at one point, I start to know that there's some warning signals out there, and we have to prepare for them. So, with that said, let's review some things. The market has been extremely strong when we are talking about the leaders, the tech leaders. This focus trade. I can't tell you. I'm just astounded by the move in Tesla after they announced that split. After Apple, they announced that split. It's just straight up from that, and that's telling me something. That's telling me that. I kind of felt this. We were actually predicting, Anthony was trying to predict a split coming up on Tesla, and he was wrong. He was dead wrong. He was a week off. And, we were talking about coming out with, when, normally they'll announce those earnings during, they'll announce those splits during earnings. But it didn't happen. They announced like a week later, which was kind of like, and it was after Apple did theirs. So Apple's did their split, and, the Apple has run up since then, and that's a great, when you announce a split, if it's it's a regular split, not the reverse split, then that is usually a very bullish sign. Most likely the stock is at the highs. And what happens is people get in before the split. So the rule of thumb is quality name, split, buy the split news. Go long after the announcement of split news. After the split, that trade does not play out, and it doesn't play out that it goes up. Lots of times after the split, I'll see it, pull back because people are actually, the market's taking out the people who think that, hey, it's a bargain now. It's cut in half, but the valuation is it, and it's usually a sell the news event. Buy the split, sell the split. Buy the split news, sell the actual split. All right, so Apple had that going for it. And then Tesla came out and announced a split. And that has continued to run up into that split. So these splits, I believe, Tesla is probably, one of them is the 31st. I think that might be Apple. I don't have the dates in front of me. Just know the upside bias is with the split. So with two big stocks like this announcing splits, there is sure to be someone else coming down the line. And I was trying to predict that on this week's show. I said, what are some of the candidates for the, next split candidate? Well, any stock over $1,000 and that performing really good could easily get a call for a split. CMG seems like it's ripe for that. One of my picks was CMG. Now, why am I telling you this? Because I think, you probably could, if we had one more, if we had one more split in one of these big things, then people would realize, hey, they're all going to start splitting again. We had that in the 90s, late 90s and stuff. It was every other day they were splitting. Some companies would split every month, it seemed like. It was crazy. It was the tech bubble. Last time we saw someone really split for me was Apple. Now Apple's doing it again. Now Tesla. If we get one more, people are going to start realizing, hey, what's the next one? Because you want to be in it. So CMG here at $12.55 is an expensive stock, yeah. But it doesn't have to, it could be more expensive once they announce that split. And what point are they going to do it? So at this point, it's probably better to be in it than even wait for the announcement of the split because it's going to gap up. So when do they announce these splits? They could do it randomly or they could do it with earnings, right? So they usually come out with earnings and announce what they're doing. So I want to do that with us right now. And again, this is going to be all over the place type of watch list because, like I said, really just seeing the big stocks run, a lot of these stocks are just sideways, I'm actually seeing Oxy here move here, and I wanted to eventually take a bigger move in Oxy. Oxy had an upgrade today, and it's on the lower trend line, and it's kind of flatlined, but it is starting to reverse a little. Let me take a look at the 5-minute chart here. That's what I'm noticing, just a candle today, that recent candle. Anyway, I want to pass right now on that. But what we want to do here, and this is the current bot, which is currently in a trade. And I have it trading the MES, and it's on sim right now. But I do connect my account to this also. Today is my research day, but I do track this, and I said I would actually update people on the bot channel. This can be found on the bot channel. It's a futures add-on for the futures traders. You could get it with your futures subscription. A lot of people have a basic subscription, doesn't have any of the bots. With the futures subscription, you get the Rock bot right here, view page, and you get the tradeometer, which is that's fantastic. It's my original indicator that I developed, and it's still the best thing out there. And we kind of refer to it, but we don't talk about it enough. So I'll let you look at that. If you're not familiar with the tradeometer, it is one of those buttons down on the bottom of your dashboard. More on that later. You know what? Let's just check it out. All right, let's check it out. Let me see here. So you're going to go to, I just want to show it because I know there's a lot of people that are on the site every week that's new, and they'll have no idea where to find the tradeometer that you get with your futures package, and you get with your lifetime free. So again, you're going to sign in. When you sign in here, just put in your password, username and password. Come on, Johnny. There you go. And then your dashboard is going to come up. I want to pause this over here. So that's Paul. Oh, actually, I can keep it up because Paul's on. And then down here on the bottom part, oops, I just lost it. Come on. There we go. Down here at the lower section of the dashboard, if this is the dashboard, right underneath the trade alerts, you'll see the tradeometer, see the rock bot. So, with the futures, that's the two channels you get. They're extra channels, and they say partnered, but it's kind of hidden. I got to relocate those on the board so they're easy to see. HPS. All right, so the tradeometer, let's open it up. You just click on it, automatically takes your account and opens it up, and it says launch. This is some instructions on it if you want to learn more about it, all the instructions how to use it and stuff. It's really cool. So we want to launch the tradeometer right now. Boom. And it opens up in its own page. And let's take a look at how it's been performing today. This is my first time looking at it too. I'm just research mode right now. But what I like to do is use this with the rock bot, just to kind of, and the rock bot's not going to give you frequent. This is really a scalping tool. Based off of shorter time frames. So it takes a combination of time frames and makes sure they all line up. So like a 1 minute and 5 minute setup on the rotations is what it's pointing it out. And it's taking the ES and the cash information to do that with. The green is usually a buy signal. The reds are short signals. And these, again, are scalps. These are short-term scalps. So it does pick out the peaks, it really well. Here, look at the Dow, and usually we'll see one that really outperforms the other one. I mean, the ES here is pretty much spot on. Yeah, nice pullback, a nice pullback, a nice pullback. We just had one. We had a bounce here, but it looks like it came into almost a divergence by taking out that low and then seeing that second low. I don't have stochastics on there, but that's what I would be looking for. I would get this alerted to me. And let's see, at 12 o'clock, what happened right here was this low and this low. And it was not a 1 minute divergence. I'm curious to see if this is a 5 minute divergence. All right, so let's take a look at that. I'm very curious to see if that was a 5 minute divergence. I'll first look on the cash chart. So we'll look at the SPX 5 minute chart at 12 o'clock. Here. Can't tell. It's not a good one. Let me look on the futures chart. I have it up with my body here. All right, so that took the trailing stop. So we're going to just move this out to a 5 minute time frame. Here's what we're looking at here. These two, but maybe it wasn't. Maybe it wasn't a divergence. All right, let's take a look here. Zoom in. You know what it was, though? It was a 5-minute divergence, because this takes into account, it back tests all the divergences on here. So whatever is running, and if I move it to a different time frame, you'll see that we did trigger a divergence here, and it moved up. So that's kind of a confirmation. Even though I don't really see the one I want, there is a slight lift there on the stochastics that are kind of turning back up. It doesn't matter. That's wasn't even looking at that time. And now it calculates to the 1 minute time frame, and it places the divergence in here. And this is a pretty good one. This is a nice divergence, a real steep one right here. This candle that came quickly down didn't really change the direction of the stochastic, and then a reversing close on the top triggered that. The divergence was triggered, and it rode it all the way up here. And this is where we are right now. So good. I'll move that back over here. So the people on the Rockbot channel now get to see. They're like, oh my God, my chart disappeared. My chart is gone. So I am, ranted a little yesterday, and I got to go into talking about this because of our change of strategy. You know, the danger out there, the possible danger out there of a fast move down. So somehow hedging against some type of black swan. And what would be that black swan? Well, I don't know. You know, what hasn't happened? What hasn't happened? Well, we haven't had the election results yet, and I think we're going to have a mess up there. I mean, it's just obvious that this script is written, and we're not going to get out of this one easy, you know? We're not going to get out of this one easy. This year is far from over. And the market, the way it's reacting, and I've been in the market long enough to have seen events like elections and stuff. And most of the elections, when there is an issue with the election, and I remember, which one was this? I even forget. Was it Gore? I think it was. Anyway, they had to delay the election, and once the market was unsure of who was the leader, it went into a tailspin. And I think it happened again on some kind of election craziness. Of course, you know about the last election with Donald Trump and Clinton, and how the market sank and then took off and has never looked back, basically. Never, you know. So, of course, I think most people are saying, hey, this will be a positive if Donald Trump got back in. But if he didn't get back in, how much would that affect the market? I always say the market's always reading about 4 months in the future. So that puts us right into election time, and the markets are at the highs. That tells me I think the market believes, if we looked at my own research, the market is telling me there's not a change of administration. But what the market's not telling us is any type of black swan event. I mean, after the dust clears, I think things continue on. I could be totally off. I could be told, but this is my thoughts, But how are we going to get to that point? Because it's not going to be an easy, clean fight. It's going to be a dirty, dirty fight, and it's going to be embarrassing probably, and it's probably going to affect the markets. And that's my main concern as we get closer to the election, and they're probably going to surround with the mail-in ballots. I mean, it just seems obvious there's going to be a whole ordeal with when these ballots are going to be counted, when's the date, how people are going to get them. It's just too many loose ends there, and just too many opportunities for something to go wrong. I mean, I am just like thinking, why can't am I the only one who thinks that this is going to be a huge thing? No way. I think everyone thinks it's going to, but the market has not agreed with me. Or we are too early. That's the thing. Are we too early? Am I too bearish on the event, and yet so the market is in a process of, crushing those people who are preparing for this? Because that's what typically happens. A black swan, a true black swan, is a kind of coronavirus. That's a black swan. Election debacle is probably be classified as a black swan, and maybe we're too early for it. Maybe it's if predicting a black swan, we shouldn't be able to predict the black swan, because that's what the significance of a black swan is. The market here had calculated wrong and now has to adjust, and that's why you get big corrections during black swans. Now, if that black swan is a definite possibility, then maybe it shouldn't be considered a black swan, and maybe the market's doing what it can to price it in. I don't know. So, like I said, sometimes you think too much, and you could dig yourself in a kind of into a rabbit hole here and chasing all kinds of theories and stuff. And, if I'm thinking that, and then if I think it the other way, and then opposite, maybe I could fake myself out. Well, the video here pushed up to 510. Now it's pulled back to 505. GNRC still looks great with the hurricanes pending off the coast of Florida and going into the Gulf. It looks like two hurricanes possibly striking the U.S. in the near future, which should continue to put upside movement on the GNRC. Probably even better on Monday if we get a more defined look at these hurricanes. This is when this one might gap up. It might gap up on a Monday. Now, if the opposite happens, if something happens, the hurricanes turn around or turn away, we might see a gap down. So, a couple different things there. The other main thing I wanted to talk about, now that I felt, I got the idea of that black swan and how to profit from that, and, I was going to do this, do some research on a couple different hedges here, but I want to keep that for a live show and then get some expert opinions on there, because I'm more of a basic chart guy. When we talk about selling premium and collecting premium, that's just something I don't do. I'm a day trader. I'm a swing trader. So I want to. We had Keldar on the other day, and he gave a good example on that, and I'll probably want to get him back on, and we'll do a whole show on it next week. All right. So right now, I want to have a good hedge in this market, and I have a feeling we're early. So I am kind of biting at the. What am I biting at? What's that? What's the term on that? Biting at the bit. Biting at the bit, I think. To protect myself some way, but protect me for what? I have a lot of biotech stocks, a lot of drug stocks, a lot of speculative stocks on my portfolio right now. When we talk about the bigger stocks, the GNRC has a good way about it. I like the Walmart down here. I added to that. I still have some UNH. These are not terrible stocks to be in, except they're not. Then I'd almost want to be out of those and into Tesla, the way Tesla is moving 100 points a day. So it's at this point, that'll be the Rockstar top once I do that. But this market here, still very strong. So we're going to talk about relative strength today as a great way of trading this market in this environment right now. All right, to continue our talk. Sorry about that. My first example of the relative strength trade, or a good example, happened actually this week with NVIDIA, but let's go over some of the basics of relative strength again. Again, I'm using an underlying index as my benchmark, or just a good read for the market. It could be, you could use different things. I'm standardizing. I use the S&P 500, the S&P. But if it's an obvious, like tech stock, and you could actually track it against the NASDAQ or the Qs or whatever, basket of underlying stocks. So what we're doing is taking the overall group of stocks and we're measuring one stock against it. So in this case, we actually. And another thing I should say about the NVIDIA, it's always good to have news or some kind of catalyst that moves the stock aggressively, so you can actually start to see the more news and the more interest are in it, the easier you're going to find the divergence, versus if there was no news, it would just be tracking along with the market most likely. So the characteristics of these type of stocks tend to come when there's news, and lots of times it'll happen when the stock is reacted negative to good news, or there's some kind of, some kind of disconnect there, where something doesn't seem right, or it seems like maybe there's a good chance of an early move. You can start to read in on this. It's hard to explain sometimes. Each setup has its own feel to it, and depending on what the news is, you really have to judge it on the fly like that. So with the case in NVIDIA, it actually came out with great earnings, but it sold off, and I actually had earnings in it, options in it, which didn't help. But we knew that it had a great report, guided great, everything was good, but it sold. So it was kind of, it started off a little bit lower. So figuring that this is going to be an opportunity, because NVIDIA is not going away, and there's actually a lot of good things out in the future for it. The pullback here was probably a great opportunity, and to be able to read that, you could actually make a call on it early in the morning like I did and just kind of get in it thinking it's going to rally, or you could wait and see how it reacts with the overall market. First of all, it's down because of some news that's perceived as bad, probably profit taking. Now, if that was to hold up, it would probably stay pretty true to the market to the downside, and maybe even, show relative weakness. So what we do is we look at the current chart of the S&P or whatever index you're using, and for tick for tick, minute by minute. And you can use this on a 1 minute, 3 minute, 5 minute time frame. You could use relative strength on any time frame. But in this case, as a trade, like a NVIDIA trade, which you could easily trade options on, you're looking at, in this case, I'll look at the open. And the market moved up here early on from 9:30 to about 9:40, 9:45. And then it started to sell off. So the same thing here. Market took off, NVIDIA took off, and then the market started selling off. You see the angle of the sell-off here. And actually, I could probably go out a little bit further. It sold off. But right at this point, what I like to do here is, always eyeball it. I'm eyeballing this, and I'm saying that, my direction here is pretty much sideways, where the direction here is pretty much straight down. So that is showing relative strength. And that's one of the more obvious relative strength setups that you look for. Now you would apply the same thing on the downside. If the market was moving higher and the stock wasn't moving higher, whether it was moving sideways, then you probably look for the first pullback to drop it down. But in this case, when you look for the first bounce, you look for this to continue moving higher. And in this case, it did run higher, but you should be able to recognize the relative strength as this is happening. It might not just wait until the 1020 to take off. It's already showing relative strength, and at that point, you have to make that decision. And that's just, once you're starting to establish that, and you probably could apply some stochastics on this too. I didn't even do that. I'm always watching this. In the case with the market here, next to the price here, and this is at the same time frame. This happened on Monday. I was actually probably in this or very close to marking this area out. These are the notes actually that I always keep on the charts while we build out charts and we're trading. So apparently I pointed out that it was an X marks the spot, I believe here. There was an underlying trend line, two good pivots, and it comes right underneath, and then there was a nice downward trend line. So it made this X marks the spot. X marks the spot is a high probability setup. It's where two trend lines really converge. In the case of a pullback and a channel and then oversold stochastic, there's a lot of things here telling us that we've got to get a pop there. So again, going back to whatever we're watching, showing relative strength, that's what you have to start to put all that stuff together. But you could do it. There's only a few rules you need to apply in trading. So eventually those things are just, they become natural to you. Relative strength is one of those. So again, go over the basics. I could write it down for you, make it look professional, but I would just say, hey, just remember, love to find relative strength early in the morning, the first hour of the trade. Lots of times you'll see it even pre-market, where the market might be doing, the futures might be doing, and pre-market activities not really affecting the stock. Where you say you wake up and the S&P is down 20 points, most likely all the names, the big names that that trade the market are also off a bit. The ones that are not or seem to be bucking the trend are showing early morning pre-market relative strength and also should be paid attention to. All right, the next example I'm going to use for relative strength is actually today's market in Apple. Now, a couple things we want to look at. Remember that stock trading pre-market trading could open up as early as 4 o'clock, and 4 o'clock in the morning, that is Eastern Standard Time. And at that point, we'll start seeing a certain stock or a bunch of stocks starting to trade and leaving the chart out. The futures are trading around the clock, so you have that continual move through, before 4 o'clock and 4 o'clock. But at 4 o'clock, you're able to start to, compare the two. And this is where we want to be able to do this. So the one technique I like to use, and I think it's a good one because, again, you're not really, it's more of a scientific and more of a mathematical divergence type of setup. A visual confirmation makes it much easier. And again, it's just about understanding a divergence and what it means. It doesn't have to be a perfect divergence, but there has to be definitely a contrast between the two things you're looking at, between the underlying index and the individual stock. So what I'll do is after 4 o'clock, or what I tend to do is get in here around 7 o'clock, and I'll look back and you can pretty much see what has been holding up. So say in this case, we're looking back at this as an educational area, but what you want to do is actually look at the low, going back from the beginning of the pre-market morning here. And what we're going to do is we're going to take that first low, because that's the important, to make sure that's a straight line. And we're going to take that first low, and I'm going to put a line in here right at the low, and that line is going to extend sideways. All right, and I'm going to extend it. Now I have a lot of blue lines on there, so I want to actually change that line to a lime green line. And then I'm going to probably make it a little bit bigger so it's easier to track. I'll make it up at 4, 3. Let's make it 3 so it's not too intrusive. And I extend it out. And as you can see, Apple kind of held up here. The overall markets, which is right here, the S&P, as you can see, has been trading off since late last night, early in the morning. And 1 o'clock, 2 o'clock, 3 o'clock, 4 o'clock, 3 o'clock it bottomed out, bounced, and then continued to move lower. So this has been very, very weak all night. And we woke up, deep in the red. At the point when we get in there, we see that we look back at Apple, and we can see it really didn't take the same shape in the aggressive downside. And how would I know that? I want to go to 4 o'clock here and realize that first low was around 4:30. Let's see here if I could. Here's my. I want to. All right, 4:30. I drew the line in. I want to go over to here, this area over here, and I'm going to draw that same line at 4:30 in the morning. So I want to take that same, make sure it's a nice flat line. I want to change it and make it green so we can identify it easier. I'm going to move it up to a little wider. And now I have that extending out sideways. So now I have my Apple, which this line is an important line. I start to see this line start to move. Now we did drop off here. And these two candles here look like they're kind of, they're not really good candles. I'm going to have to fix that for a second here. Let me just fix that. Sometimes the data on, you get these big candles on the Medved quote trackers, so sometimes I got to clean up the chart. All right, so we go out and we actually are watching this, and you can see around 8 o'clock when the market, let's go over to the S&P here, and you can see that I want to extend this line out. Let's extend it all the way out. Cuts through that level. 6:30 it started breaking down through that line. And then we broke down pretty hard here, going into 8 o'clock. Now this, we did get a little pullback here. But this is the important part. At the point we get back through that first low, basically back into the early morning range, we talk about this maybe being if I zoom out here, it's going to look a little tighter to you right here. And you could say that this, if you put a line up there, there's a kind of a range that we're trading here. All right, so we kind of cross back into that range, and whatever time that is, and I mark it off, it's about right before 8:30. I want to be able to take a look at what the underlying index is, and this was our original line to put everything at 4:30, kind of put everything together. At 4:30, we're equal footing right here. Market sells off aggressively, and we start to bounce. The Apple bounces first and gets back above that early morning low, gets back into its trading range. At that time, you're looking at the market here way underneath the that level, way underneath. So you're actually seeing relative strength in Apple compared to the market. Now the market continues to show strength at that point, but at this point right here, seeing the difference between that and seeing that push back up above that early morning low, that is really your buy signal, and that's where you want to be concentrated on, because anything the market does right now has been proven to the downside and then showing that strength. But the upside here, there's a lot of potential here. You can see here, right at the open, it was a little shakeout and not much going on the 9:30 open. But at that point here, as the market continued to push higher, this was also very aggressively moving higher throughout the day. So, all because of the relative strength we're seeing from the early morning push back up into the original range. And again, here's our green line, and we never got even close to that. So we might look at a lot of other stocks, and it'll probably take on that same feel to it. As long as it's a liquid stock, you have enough pre-market activity. And again, it usually is surrounding a stock that has a little bit more interest, a little bit more news on it. We want to have some kind of catalyst on it, some type of momentum. Excuse me, momentum to be able to see the move and be able to recognize that type of divergence or that type of strength. So again, now we're looking at using this technique on any type of news. Any type of news, be it earnings, especially earnings. This is a great technique to use during earnings season. But general market news too. Where the market here, it might be trending aggressively in one direction based on news, but there's certain stocks that are actually holding up. So there's got to be a catalyst on one side. It has to be a catalyst on the stock or the overall markets to be able to see when that strength or weakness comes in. And a pretty easy concept to remember. I mean, it's just basically you're comparing the strength and the weakness, side by side. I have a large screen here, and I'm going to try to move this around. So I have on the center of my screen is the S&P chart, all right here. I'll move it around a bit. And then around, I'm going to just move up here around the chart. If you can see me moving all the way over to the right-hand side, I have all these stocks that are lined up. If I move down here, all the way down to the bottom, and then all the way over to the right, I have all these stocks. And then if I go all the way over to another, I'm looking for where the chart is. If you could see that, I don't know if you could even see it because I'm bringing it all the way over to the other screens and stuff. So I have a good 80 stocks that I'm comparing. And you don't need to go into that many stocks to get a good read on relative strength. Just kind of keep to the main momentum stocks. They're very easy to see. I mean, you can look at the Facebooks, the Nvidias, the Apples, the Teslas, and you might say, well, they're too big for me. But this technique is really good that you got to step up. I mean, even if you're trading those options, you want to be able to trade those options, even if they're costing you $12, $13, $20. You could just get a couple of them. One option on this type of move could net you, one option that you pick up for $12 could give you a 50% move very easily, and you can pick up $5-6 on that. With a good, strong move. You want to be in the right stocks. You want to be in these stocks that are really aggressively moving. The CMGs, the Nvidias, the Apples, the Sam Adams, the Teslas, even down to anything that's really moving. Costco. And then, always keep an eye on for certain stocks. I'm watching so many, but a lot of these stocks are kind of going sideways. When they stop going sideways and you start to see that relative strength in them, say in the Boeing, they have the potential to give you those big day moves too, but you got to recognize them early. And then the best way to recognize that, like on a stock like Boeing, it would be relative strength versus the market, because that's when major institutions might begin into start major funds or something that switches on. They flip the switch on it. And now you have aggressive buying coming into it, even though the market might not be showing it on the outside. The market might be volatile to the downside or whatever, but you're seeing that relative strength. So I always add Boeing to my relative strength watch list. I always have it next to my chart because I'm always watching that relative strength. It's a big enough stock and it has a lot of ground to make up that once it starts moving, that's where you're gonna jump right in it. All right. I want to give a shout out to Robert Maximilian out there for being one of the guys who really bring a lot of the momentum trades, ones that show great relative strength. He uses that technique all the time, and we assigned a lot of color to him in the chat room, so you're able to identify, see his posts more often. So good job, Robert, on that. And again, coming back to why we're focusing more on this type of trading, because these are fast trades. These are usually day trades. Best case scenario, you're in a good position, like you start to see a bottom being put in, or you have a large spark candle and you want to hold overnight for momentum. That's fine also, but lots of times, most of these stocks, I would say, most of the setups that you're looking with relative strength are meant to be taken off as a day trade, because you're paying a little more for those options because you're dealing with bigger stocks. But with that, taking that in consideration, don't think about it as holding it. Think about it as trading it. If it starts going against you, it's easy enough to get out. You're not giving up all that money. This has to show relative strength. If it starts breaking down and breaks down through that first low, or things start to turn, or there's news, it's easy enough to push that sell button. You might even want to consider giving yourself enough time. So go out a little on the options, willing to pay a little bit more, but you get a little bit more of the premium, so you don't have that time decay eating at your position. There should be other things that you can constantly look for to add to your probabilities of success, things that other high probability combinations. So in the case with the Apple here, when you're looking at that pre-market level, look what happened when it dipped down here. It took out the lows. It made a higher low on that 5 minute divergence here. It was actually a visual one. I don't see a marker there, but it was one. It was definitely a beautiful divergence there. And once it started crossing back up, that's just as good as being oversold. Stronger stocks that you identify with the relative strength should be paid attention to more on that 5 minute time frame, because you're going to get a bigger move. And if you're trending up nice, that first rotation back into an oversold level is usually a good opportunity to get back in. If you missed your opportunity, first opportunity, and get in it. The first rotation on a 5 minute chart on a trending strong stock is a good entry. So that's just kind of tips of the trade here. This type of trade, again, first 5 minute rotation, doesn't matter where it is. We can see we've been very strong here, unless the markets have are telling you some news that's causing this pullback. If there's no news and everything is good, this should be bought right here. And if we can go back and see that on if we can see that in the video on the other example on VDA, if I can go back out a couple days here. What was that? Today's the 21st, Friday, Thursday, Tuesday, Monday. See, the Monday that was such a fast move. You can't really even see it on the 5 minute chart. It was you did have a. Let me see if I can zoom in here a little bit better. Kind of. I'm gonna have to adjust this over here. Yeah. Here was the nice move off of that, but that was also kind of a coiled up, what we call a coil stochastic setup here. A nice series of 4, including the top 1, 2, 3, 4. Actually, it was 5, and then it turned back up. Didn't really give a big return off of that. But again, what you are seeing is that 5 minute bounce, that 5 minute bounce, 5 minute bounce, the 5 minute definite bounce here, especially if you're starting the day off on a 5 minute rotation. First 5 minute rotation, bounce. You know, it's always good to have that on your side. It doesn't take any time to check it. Just put it down on your checklist for your divergent setups. Check the 5-minute. Make sure the 5-minute. These are things that will add confidence to your trade, and make sure you're getting into trade. Lots of times you don't get into that trade. If you have more things you have lined up, the more comfortable you're going to be getting in there. All right. I think that's a good review of relative strength and how we're going to approach that going into next week and going on. I would like to continue to add to that, and maybe make just a dedicated video with a lot of the everything written out, so it's more of an organized educational thing. But went over a lot of that just to talk about a few stocks here. And again, my nervousness up at this level, feeling that we put ourselves out there if we're holding anything too long and too big. And this market here up at this point. But as everything continues to play out and continue to move up, I mean, I wouldn't be surprised to see the market gap up on Monday again, and to have CMG and NVIDIA and all the Apple gap up again and continue to push. I just don't think the timing is going to be there for us. But I do want to be ready to jump on it if something does happen. It's going to be an interesting day, and maybe we find it happens. Maybe news comes out after the close one day, when we have to get in really early the next day, or take advantage of some type of futures trading. But let's get back to some stocks here that I'm watching going into next week. Now there is a few that haven't broken out yet. Reynolds. It sounds like a boring stock, but the chart is actually primed to take out the highs. REYN. Let me just double check. I don't know if they came out with earnings yet, or when they're going to come out with earnings. See if I could find. That would be a good catalyst for the stock. Let's see if I could find that fast. I'm not sure if I'm going to be able to find that for you fast. Let me see what we have here. November 4th before the market. Unconfirmed. November 4th. They beat by 3 cents. August 5th they came out with earnings. Beat by 3 cents on August 5th. And it looks like it probably got hit here, a little sold off on that, but it's come back here, back up to the scene of the crime. It actually looks fine. Missed on revenues, reaffirmed fiscal 20 EPS guidance. Company acknowledged that the magnitude of the duration of increased demand remains uncertain. Company acknowledges that the magnitude and duration of increased demand remains uncertain, and that the greatest challenge it faces as a result of the pandemic is the ability to maintain the level of supply needed to keep up with the increased demand. So everyone's saying, all right, demand is good. Stock is not pricing that in, but it might. At one point it might. And then there was another one. The Warner Music. Warner Music Group. It's a recent IPO. It's chopping around $30. I don't know. I'm not too impressed with it. So I'll be watching the Reynolds a little bit more. I did some scans here. AMT, American Tower, came up as a divergence setup. But also it came up as a trend line. Now I have an old blue trend line here. That's a pretty good trend line. It goes out to 2019 lows. It did flush here, which we talk about whenever we flush due to news, and we come back onto it. The integrity of the trend line will remain intact the next time we tag it. So we're actually tagging it again here. Came down fast, held it, and we kind of reversed off of it, put in a little divergence signal. So that's it's interesting. $249. Not that far off the highs. I like it going forward. And the other divergence that shot up on my screen here is FF5V. It's not a big one. I'll bring it to the table. The last big opportunity was in March, of course, but pull back a little. It's slight divergence. Looks kind of boring. I'm going to pass on that. Cisco is something I haven't looked at in a while. And this is completed. When this came out with earnings, I remember watching a show before this. Fast Money guys were all predicting this to pop to 52-week highs, I believe. And of course, you saw the big gap down. And when we look at a gap down like this, what I said is, even though everyone was expected this one to go up and it gap down, I would wait 5 to 7 days, what's called a 5 to 7 day pullback in HPS trading method. So it gives time for the stochastic to get oversold, to get all the selling out of it before rotation back up. So we're in 1, 2, 3, 4, 5, 6, 7. We're actually on the 6th, 7th day. And you can start to see it started moving up yesterday. I'm taking a fast look at the calendar left in the earnings season here. As you could, this is a pretty good tool to use that I use from FinViz Market Map. And you could, if you scroll down, you can go to earnings date. The ones in purple are still left in this earnings. So we can see there's a few in the tech. We have Adobe, Broadcom, Salesforce, Intuit, and Autodesk. And then there's some smaller ones here. NTAP, Network Solutions, HPQ, HPE, Hewlett Packard Enterprises. It's amazing to see these big names now, how small their market cap is based on what, look at Microsoft, Apple, Google, Facebook, Amazon. The big FANG stocks. Berkshire Hathaway's up there, Visa, MasterCard's getting up there, but oh man, some of these old school names we used to follow really shrinking compared to the big ones. Other stocks here, Dollar General should do well. Dollar Tree, those two are going to August 27th. They'll be next week. Hormel Foods and Best Buy here coming out, and there's a few others. So this is MDT earnings are coming out on August 25th. MDT, which I do like that stock. So I just wanted to update us on that. Cooper Tires too, but most of the earnings are behind us. I checked I actually did check the upcoming biotech catalyst for this next week, and it's not much. I'm still holding some CRBP, which is due in our phase 3 in the summer of 2020. No real date on that. I think it's overdue as it is right now. And then I was looking at some other ones. Phase 3 data due mid 2020 and MISO and MESO, and I see a lot of people. A lot of people were trading this recently. I traded it recently, took it off a little profit, and was happy about that. And it just seems to be hanging out here. It's sideways, waiting for. I think it's waiting for these results. It's popped up here, and now it's gone sideways. So it is something that might be coming down the pipe here next week or the week after. Very close to this. It seems to be acting pretty good, but if it doesn't, if it gets hit, I mean, you could really see a big snapback on this. Bmrn is a good example of that. Bmrn. Let's take a look at that. Yeah. So. Maybe next week this thing starts to move back up. It's going into that. It's not the end of the world on this stock, but it sure is a big blow. They requested 2 more years of information, or 2 years of data, and I think the last person in their trial is due. 2 years would be 2021. So it kind of puts us out there, and it's no real catalyst here. It's probably a dead stock until then. And this will take a look at today's action here. Nice pullback. Let's see. Are we at? Let me see where we are here. This was the triple. All right. So this was the textbook divergence. I was actually on the air for this, and then from that point on, we kind of rallied the whole day until around 11 o'clock. We kind of pulled back, and then we started moving back up. Through the previous high. I'm looking at here's another nice double bottom divergence right here. Beautiful double bottom divergence right there. Real steep, very steep. And from that point on, it was off to the races at 2 o'clock. You could look back at that. That was a great opportunity. There wasn't really, I was looking at here, maybe possible divergence if you could read into. I think there was one, and I think the bot picked it up because it was a steep one you can really see. There's nothing else here. Let's take a look here. I think there was another one. Oh, there was another one here at 250. And yeah, let's take a look. Did that hit it on 250? No. All right. Sometimes those fast little flushes, and you can see that divergence. If you could actually see it, you do have an opportunity there. And another textbook double bottom divergence. Another textbook double bottom divergence is going into the last 20 minutes of the day. So again, you have a lot of opportunities in this market, but I believe these opportunities are going to be on a short time frame now going forward. We're going to watch for any new splits, get into those. Those will probably be the swing trades, and everything else will be based off relative strength and the bot and anything else that that we trade faster on the options, even in the market with the SPY options and stuff. I think that's the way to go going forward right now. All right, so I am going to try to upload the updated bot script with the new stop placement. I'm going to work on that now, and I think I got a couple stocks I want to add to the list. I do like these divergences in AMT. I don't see myself getting in it though right at this point. No updates on the penny stocks. Nothing really moving there. A lot of people are watching that kind of load here on the pullback and see if we can actually get a bounce. It's a cheap one. AUPH actually closed near the highs of the day today, and is there a potential flush move back up? It's still trading in this dead zone area inside this channel for the last a whole month here. It's basically just gone sideways. It's very frustrating for people holding these stocks. It's almost better to be, like I said, be in the more aggressive stocks, but you just don't know if there's a catalyst around the corner for these. It's actually acting a little bit better. It's better than the EXCL, which a lot of people also have, which have really gone nowhere. So I want to leave that as it is, and we're going to pick up this market here and really take it Sunday evening when the futures open back up. I'll do another update and kind of keep everyone updated on what's going on. And that's how we ended the day. Day ended up 11 1/4, and again, starting next week, wouldn't be surprised to see another gap up in this continued move higher. Definitely, or right up against highs. One last thing I want to talk about is the Boeing here. Now, Boeing, it's hard to get on board on this with everything that's going on with the airlines and stuff. But if we go all the way back out, and it's hard to read on this chart, but I'm going to try to zoom it in for you a little, see if we can make it a little bit better. Oh, let me see if I need to go out and then go over, I think. Let me see. Yeah. So this line that I have here, this black, goes all the way out to 2015, the highs of 2015. All right, now I'm just going to slowly go across and see if I can make it a little bit. Well, no, we're just going to slowly watch that line. It's going down. We break above it. We kind of rally 2018, get all the way up to $400. Back up here 2019, $450. Chopping around, and then boom, coronavirus, and or the accident, and all the issues, and then the coronavirus, and then the bottom fell out of Boeing. Now, if we come back and we see that vertical line, or that horizontal line, where it's located right now, we are right back to that level. Now, I'm going to zoom in, and you can see when we almost broke down through, we stutter stepped down in a couple days, get rid of some of these lines here. It's a nice downward trend line. I'll leave that one. See if you could see it better. But this horizontal line, and we kind of chopped around it, but then we held it, and we held it, and we held it, we held it, and we continue to hold it. and we broke back above it. Now we came back and held it, tagged it almost. There's something to this line that's really holding us at this point. And this is where we are. We actually kind of just bounced off of that. This is looking at the daily. Let me make sure we're all up to snuff here. There we are. So you can see this trend line. We came down to it. Now we're right down on it right again. It's really just very difficult to see it, but it is, believe me, at 157 to 167 level. So a 10-point range in between this. And we're right above it. We're at 167. That, this, I would give this line, plus or minus 5 to 10 points just because it goes back so far. I'm not exactly lining it up to the top of the candle, but it does look good. We have a little trend line here, breakout there, pushed by. Now we've just been dragging on here. I guess there got to be some kind of recovery for us to get this one. No one's really interested in it. Daily's almost oversold, but I'm keeping my eye on this. I don't mind taking a shot on this with the options when the time is right, and I have a feeling when we have a big candle on this, and a good volume comes into it, it's going to be a follow-through run to get in this. Eventually, so we have to just be watching it. It has to be, I expect another run like this. A big day, trending day, we'll be able to identify relative strength, but then we'll also be able to hold on to it for follow-through days. And I think we're pretty close to that right now. We're almost oversold. That would be a good level. We're oversold on the 9.3 to 14.3 is getting down there. So this is high on my watch list of areas. And the UNH is another one I really think we're going to break out here. I want to be able to actually, one of the ones that I'd like to pull back here. So it hasn't broken out yet. I think the next time we break out, we probably have a significant run here. It's chopping around 316 to 320 change. So that's good. And then again, we did mention that MDT is coming out with earnings next week, which should be a catalyst. This is another one that's just been tightly wound up and not much going on there with this tight consolidation. It's kind of a dog days of summer for some of these stocks, unless you're in the right stocks, the Teslas of the world. And that's where all the fun is. That's looking at the sun. But Mama always said, what did she say? Told me, never look at the sun. But that's where the fun is. All right. I'm calling it a day. If you have any questions or anything, you know where to get in touch with me. You can email me, ironaction@yahoo.com. Have a great weekend. Enjoy yourself. Stay safe. I'll see you Monday morning, but Sunday night, maybe you never know what's happening. The future's open at 6 o'clock. Enjoy it. I'll see you then.